I am going to break down financial statements, including the balance sheet, income statement / profit and loss, and the cash flow statement in a way that's super easy to understand so you can take your business to the next level. Hey, my name is Arjun. I'm the CEO of doola.com. Doola is a business in a box, and we are a venture-backed startup here in New York City that has successfully raised over $13 million of venture capital for some of the world's best investors, including Y Combinator, HubSpot Ventures, Nexus Venture Partners, and notable angel investors like Cody Sanchez, Graham Stephan, Sahil Bloom, and more. And along the way, we've helped over 10,000 entrepreneurs from over 175 countries start, run, and grow their dream business. Now, I promise you, by the end of this video, you will know how to read and you'll actually understand financial statements. So we're going to talk about what they are, how to read them, and how to actually get value from them for making real business decisions. The way I'll cover this is in a couple steps. I'll first go through the different types of financial statements. Then we'll go through an actual balance sheet. We'll go through an actual income statement, also known as a profit and loss. And then we'll go through an actual cash flow statement. Let's dive in. First, what are financial statements? Financial statements are reports that summarize important financial information about your business. There are three main types of financial statements: the balance sheet, income statement, also known as profit and loss, and cash flow statement. I'm going to walk through what each of these three statements do and how they work to give you a full picture of your company's health. Let's start with the balance sheet. A balance sheet is a snapshot of your business's finances as it currently stands. So it tells you about the assets you own and the liabilities, also known as debts, that you owe at a particular point in time. Balance sheets are broken up into three general categories: assets, liabilities, and equity. Let's break down each of those. Assets are anything valuable that your business owns, including cash, office furniture, inventory, and patents. They are often divided into current assets and fixed assets. Current assets are cash or cash equivalents, something that you can sell quickly. Liabilities are debts you owe to other people, like credit card debt, mortgages, and accrued expenses, like utilities, taxes, and wages owed to employees. They are usually split into current liabilities, which are owed in the next 12 months, and long-term debt, which is owed beyond 12 months. And then there's equity. This is the remaining value of the company after subtracting liabilities from assets. Equity can come in the form of common stocks or retained earnings. So overall, the balance sheet equation is assets equals liabilities plus equity. Big businesses like banks prepare a balance sheet every day, while small businesses, like a brand new Shopify store or Etsy store or Amazon FBA business, might prepare a balance sheet every month. The frequency depends on how many assets are moving in and out of your business. So what can you learn from the balance sheet? You can measure the liquidity of your business with the current ratio, which is current assets divided by current liabilities. This will tell you if you'll be able to pay off your debts in the next 12 months. There are many other useful ratios you can calculate using just your balance sheet, but that's one of the most common ones. Okay, let's move on to the income statement, also known as the profit and loss statement. The income statement, or P&L or profit and loss, tells you how much money your business has spent and how much it has earned in a specific period. This lets you calculate your net profit, also known as your bottom line. So your top line is everything coming into the business. Your bottom line, also known as your net profit, is what's left over. Here's what an income statement includes. There's revenue, which is how much money you earn. There's the cost of revenue, or cost of goods sold, sometimes abbreviated as COGS, C-O-G-S. This is how much it costs to make and distribute your product or service. There's gross profit, which is revenue minus the cost of revenue. There's operating expenses, which are all other costs of running a business, like utilities, rent, and support staff. There's operating income or loss, which is gross profit minus operating expenses. There's taxes and other non-operating expenses. These are subtracted from operating income or loss to get your net income. And then there's net income, the bottom line, how much money you walk away with after subtracting everything else. The income statement shows if you're making money and if your business is profitable. It also helps you see if you're spending too much on producing your products or on overhead costs. And then there's the cash flow statement. The cash flow statement tells you how much cash entered and left your business over a particular period of time. This is different from the income statement or profit and loss statement, which shows how much you spent and earned. The cash flow statement shows the cash reality of your business, which is most relevant for businesses using the accrual basis of accounting. If you're confused about cash-based or accrual-based accounting, check out our dedicated content on that. A cash flow statement includes cash from operating activities. These are core business activities like buying and selling. Cash from investments. These are investments in your business like equipment, cash from financing activities. This is money from the owner or loans. By adding all three categories together, you get the total change in cash. Adding the beginning cash to the total cash gives you the ending cash, which you can then check or reconcile against your bank account. That's the end of the financial statements crash course. If you are an accounting pro using accounting software, you can actually create these statements yourself. If you're less comfortable with accounting, consider using a dedicated bookkeeper. And if you don't have a bookkeeper today, check out doola.com. We'll actually do your bookkeeping for you and create and send you these statements every single month so you can make smart business decisions and stay on top of your finances. As a quick preview, here is what Doola bookkeeping looks like, and you can actually go right in and generate these statements self-serve over any time period. So as a business owner, you can come in, you can generate your cash flow statement, your P&L or income statement, and your balance sheet. You can then pick the date range, you can group it over different time periods, and generate the report self-serve. But look, as a business owner, we know things get busy, so many people actually opt to have a dedicated bookkeeper who actually can do this for them. The dedicated bookkeeper can even generate a custom report, meaning you as a founder can focus on what you do best, which is building and growing your business, while the bookkeeping and staying on top of these key financial reports is handled by someone you can trust. And the best part is, once you have all of your accounts created, just coming in to do a bookkeeping, you can get a snapshot of your financial health at a glance, inflows, outflows, and your profit over a given time period. Oh, by the way, we also have CPAs on our team and bookkeepers, it's not outsourced, that you can chat with, and we can actually do your business tax filings too. So if you're looking for help taking care of these financial statements, taking care of your business back office, you can schedule a free consultation or book a demo with the Doola team today. We are more than happy to help. We want you to focus on building your business. Let us handle the unsexy yet critical back office required for your business's financial foundation. Good luck on your entrepreneurial journey. Happy bookkeeping. Thank you so much for watching this video. If you have any other questions, please comment down below. We're happy to create more content. And if you liked the video and found value, please like, subscribe, hit the bell notification. We'll be putting out more content just like this. Thank you so much. See you soon.